Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate jargon. Today we're diving into a Form 8K filing from IES Holdings. I know, sounds thrilling, right? But stick with me because buried in these documents is information about how the company is doing and what its plans are. You might be surprised by what we find and what votes may mean for investors. This Form 8K is like a snapshot of important events at IES Holdings filed with the Securities and Exchange Commission, or SEC. It tells us about a recent meeting where the company's shareholders got to vote on some key decisions. The date of the report is February 20th, 2025, so this is pretty fresh information. IES Holdings Inc. is the company we're talking about. They're incorporated in Delaware and have a file number with the SEC. This is all pretty standard stuff for a public company. This tells us that the most important thing talked about in this report happened on February 20th, 2025. Think of it like the event date for this particular filing. Now we're getting to the good stuff. This section, item 5.07, is about what happened at the annual stockholders meeting. This is where the owners of the company, the stockholders, get to vote on important things. So, on February 20th, IES held its yearly meeting for stockholders. At this meeting, they voted on things like who gets to be on the board of directors, who their accountants are, and how much the top executives get paid. Each of those things can steer a company one direction or the other. At the annual meeting, the company's stockholders elected all of the company's nominees for director say-do, meaning they picked the people who will be in charge. They also approved Ernst & Young LLP as their certified public accountants, meaning they are okay with who is checking their numbers. They approved in an advisory vote how much the top people get paid, and they approved some changes to the way they give out stock as incentives to employees. The first big item was electing the board of directors. These are the people who oversee the company's strategy and performance. Think of them as the guardians of the company. The shareholders voted on a list of names, and let's see who made the cut. Each of the people that the company suggested to be on the board of directors, including Jennifer A. Baldock, Todd M. Cleveland, John L. Fouts, David B. Gendel, Jeffrey L. 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 Gendel, Koshkin were voted in. This means that the people who own the company are okay with these people being in charge. The votes for each of the suggested people were in the millions. Next up, the shareholders voted to approve Ernst & Young LLP as the company's certified public accountants. Essentially, this means the shareholders are okay with Ernst & Young checking IES Holdings books, making sure everything is accurate and above board. The vote was overwhelmingly in favor, with over 18 million votes saying yes to Ernst & Young. Only a small fraction voted against or abstained, so it seems like everyone's on board with this choice. Here's a juicy one. The shareholders got to vote on the compensation of the company's top executives. This is what we call an advisory vote, meaning the company doesn't have to follow the shareholders' wishes, but it's a good idea to listen to them. It is basically taking the temperature of how happy shareholders are about how much the executives are getting paid. Again, the vote was mostly in favor, with over 16 million votes approving the compensation. However, there were over 1 million votes against, showing that some shareholders aren't thrilled with the executive pay packages. It's something for the company to think about. Finally, the shareholders voted on approving the company's amended and restated 2006 Equity Incentive Plan. This plan is how the company gives its employees, including executives, the chance to own stock in the company. It's a way to motivate them and align their interests with the shareholders. Basically, it is how they give people ownership of the company and get them invested in how the company is doing. The shareholders mostly agreed with the company and the change to the plan, with over 17 million people voting for it and just a small amount of people voting against it or not giving an opinion. The report finishes with a list of exhibits, which are extra documents that provide more detail. These can include things like the actual text of the equity incentive plan. One of the exhibits is the cover page interactive data file, which is basically a machine-readable version of the information in the report. It helps computers and analysts quickly process the data. So, what does all of this mean? Well, it tells us that IES Holdings is operating with the support of its shareholders. They've elected the board of directors, approved the accounting firm, and given a thumbs up to the executive compensation and the equity incentive plan. However, there was some discontent over executive pay. Now, let's step back and look at IES Holdings more broadly. Based on this report, it seems like the company is generally in good standing with its shareholders. The election of directors and the ratification of the accounting firm went smoothly, indicating confidence in the company's leadership and financial oversight. However, the advisory vote on executive compensation reveals a potential area of concern. The significant number of votes against the compensation packages suggests that some shareholders believe the executives are being overpaid, which could lead to friction down the road. One notable risk for IES Holdings is the potential for shareholder unrest if the company doesn't address the concerns about executive compensation. While the vote was advisory, ignoring the shareholders' concerns could damage the company's reputation and make it harder to get shareholder support for future initiatives. As for the stock price outlook, I'd say IES Holdings is cautiously optimistic. While there's no specific financial data in this 8K, the overall positive tone of the shareholder vote suggests that the company is on the right track. However, the executive compensation issue is a yellow flag that investors should keep an eye on. Based on these factors, my recommendation for IES Holdings is cautiously bullish. I think the company has potential for growth, but it needs to address the shareholder concerns about executive compensation to maintain long-term support. A reasonable target price range would be $40 to $45 based on current market conditions. Keep in mind that this is just my opinion and you should always do your own research before making any investment decisions. Thanks for watching. If you found this useful, please subscribe, like, and comment.